Welcome to Crypto Kid Podcast. So today we have a special guest. He's been on before, Emmanuel, and he's an expert in financial banking and other things. He's been around the world. I believe last time we recorded, he was in China. He's right now in Malaysia. Yeah, it's
Yeah.
not too far away from Singapore. And he decided to come back on, give me another shot. I don't know why. I just chilling. And yeah, dude, thanks for coming back. And for those who didn't listen to the last podcast, make sure you check that out. And why don't you just give us a quick rundown on how you got involved with financial system and blockchain technology and what inspired you? That way new tuners can get a little brief details about you.
So, Sunny, I'm so happy to be back on your show. I mean, I love your show. I love what you do. I always told you to treat me as your banking man looking back into the crypto industry. So, I'm the founder of something called The Asian Banker like 27, 28 years ago, out of Singapore. And then because it's called The Asian Banker, I got to travel to just about every country in Asia. And then we became Tab Global because we started expanding into the Middle East and Africa. And basically, I'm the man with the license to travel around the world, meet bankers from all the different countries, get to understand how they run their banking system, and then look at trends that are both domestic or local, and then trends that are global. And one of the amazing things is that when you're called the Asian banker, believe it or not, a lot of American bankers are very interested in what I do because there were a few American banks, Citibank, JP Morgan Chase, Wells Fargo. Every time they grow their business, they look out for people like me to understand what's going on in my side of the world. And through that, I became acquainted with a lot of big decision makers in the U.S. banking system. In fact, my first book, the Great Transition, the Personalization of Finance, the foreword was written by none other than Barney Frank, the congressman who co-authored the most important piece of banking legislation in the U.S. So in that sense, I'm from over there, but I'm also there. Like I'm visiting Sarasota from time to time, so I'm not very far from where you live. So I'll be back in the U.S. next month. And lots to do on that front. And what's interesting about crypto is that I have had a front seat view of understanding how crypto is evolving in different parts of the world, in the US, in China, and in places like El Salvador, Africa, and so on. And the news I have for your audience is that you know what, the banking system is beginning to uh, embrace crypto. Whether they like it or not, they are finding that the rules that dictate crypto. And what's crypto? If you take Bitcoin, for example, it's like it's 24/7. It creates its own liquidity. It's got no back end. And then it creates its own financial system, and all of that. All of that is finding its way back into the banking system. So banks today are becoming increasingly 24/7. They can't help themselves. They can't shut down at 6 p.m. They need to keep markets open, at all the time. In fact, the SEC, if I'm not mistaken, wants to put in place legislation that opens up capital markets 24/7. And that's because of the influence of crypto back into the traditional banking system. And then the banks themselves, anything that the banks do, payments, trade finance, supply chain, has got so much back end that it's so expensive to run these infrastructure. And crypto technology today, enables a lot of the transactions to be done peer to peer without any legacy, without any back end. And so the disciplines of crypto are finding their way into traditional banking. So that's the first thing I want to have to say, now that we're meeting up again.
Yeah, the traditional banking system is, I feel like it's so flawed because there's so many issues that I go through with them. First off, it's just trying to get a loan for if you're an entrepreneur trying to get a loan for a business, it's just so difficult versus getting a loan for college or a car. A house can be a little bit difficult too now since the '08 crisis, but things like that. And then with the good thing about crypto market, like you said, it is open 24 hours. And then also with the traditional, if if things are shut, if you get fraud alerts on your card or your credit card, and it's like 12 o'clock at night, you're just like, well, what happened? You don't have anybody to call that late because you have to literally wait until the following day, working day, even if it's on the weekend, you have to wait until Monday. So it's just like all these steps and it's prolonged and it's frustrating. It's just like, I want my money now. We're living in a faster world, faster time. Everybody just wants things done right on the spot. And that's what crypto has produced since it was started. So, and you want to talk about financialization of everything. So we're gonna break it down to like what exactly do you mean by financialization of everything? Are you talking about like how China's getting involved into cryptocurrencies and competing with the US and now it's kind of like causing a friction, or it's just like you're talking about the like NFTs. I don't know if you're familiar with NFTs, like and what is it, AFTs or whatever, EFTs and things like that. So we're just playing a little bit more about financialization of everything for me.
Okay, for today's conversation, let's focus on this. Um, Financialization of everything simply means that anything that can be digitized can be financialized. In the old days, you wanted to trade something, you had to create a security, and a security would usually be in a form of a piece of paper. But because trading today is digital, the whole idea is to get any asset that can be digitized to be put on the platform and then traded. So they digitize securities, they digitize NFTs, and gaming digitized tokens that gamers exchange with each other. So the financial markets will increasingly be looking for assets that it can digitize and then have it traded. So that's the world that we are entering in right now. But the one asset that was ripe for digitization, but many bankers didn't pay attention to, was the humble deposit account. And what's a deposit account? It's money that you put into your own bank account. And like you were saying, very frustrated that it's your own money and you can't touch it. When you want it, you've got to either go to an ATM or, your bank has some kind of a interbank processing capability. The US has just introduced FedNow, which enables you to make transactions instantly with whoever you want, and you can pay anything from for a meal or for a rent, just digitally as quickly as you can. Now, so in as much as anything that gets financialized or digitized can be financialized, and the big one that's coming on stream now is that your deposit account will be digitized. Excuse me. Your deposit account is already digitized, and we are already beginning to see the impact of that on the banking system. So what happened to Silicon Valley Bank, for example, was that precisely because it's digitized, you can have a bank run in an instant. Elon Musk tweets on the Tuesday morning, on a Wednesday morning, the bank loses $10 billion. So, and the banking industry as a whole is trying to come to terms with what this means to their business. They can't keep a long queue waiting outside the bank branch in order to buy time to try and deal with that. And the other thing that you was talking about, which is that, how difficult it is to get a loan for a business when it's so easy to get. The fact that it's difficult to get a loan for a business as it is, to get a loan for a student loan or a mortgage sometimes. A lot of that depends on how much of your own data it can be digitized in order that it can be financialized. Okay, and banks haven't come around to figuring out how to, or banks in the US haven't come around to how they can digitize what they can know about your business in order that they can financialize it, help you, take a loan, but also, help you spread your risk, to your suppliers, to your counterparties, and all of that. In some parts of the world, actually, China is where a lot of this is happening. Oh dear. Excuse me about that. China, which is where this is happening a lot, is that banks are going to, and it's not really the banks, it's the financial platforms, the non-banks, the new players. They're going to supply chains, going to factories, and then asking them, who are your distributors? Who are the distributors of the things that you produce? So in one case that I know clearly is an orange juice manufacturer. And it's had a distributor base for the last 40 years. So it goes back to the orange juice manufacturer and says, give us access to your distributors. They've been doing business with you forever. And just by how many boxes of orange juice they sell, we can give them credit as a result of belonging to your stable supply chain. So the operating principle there is that all of that information needs to be digitized so that the financial system can plug into, give credit, raise capital, and facilitate payment flows. So the thing is that in the US, many traditional banks are afraid to get into this kind of relationships because the data doesn't exist or isn't yet available to the banking industry. And you need some of these fintechs or financial technology companies that are willing to take the risk to create the supply chain and collect that data in order to be able to make those loans available. And the other thing related to the financialization of everything is that the American banking system, the US banking system, is specifically worried and is penalized for something called money laundering, which is that it has to make sure that it knows who its customers are, validate that customer, and then allow that customer to transact in the system. But the problem with money laundering as a concept on the face of it is that in order to validate every customer and validate every transaction as being legitimate, as well as not having a source that is illegal, is that it incurs an incredible cost. And that's why the banks that you talk to are afraid of taking on board customers that are not introduced by other customers, which is a bit silly. In other words, you can only grow if you already have customers. If you don't have customers, you're not going to be able to get your next customer. And also the process of validating the customer, it requires costs. And some banks are just not willing to incur that cost. So that's where the US is at the moment. But as long as new sources of information can be validated, they are potentially capable of getting into that business because many players around the world have already got into this business of lending to small businesses, validating their customers in the cheapest possible way, validating each transaction, and technology such as blockchain enables the purpose of transactions to be carried along with the transaction itself. In other words, if I make a payment to you, the blockchain can carry not just the payment advice itself, but the purpose for which the payment is being made and the validation of the parties in the transaction. So all of the technology is there and waiting to take place. It's just how quickly the traditional banks can onboard these technologies. And the strange thing about the US is that it's the one market where the banks are the dominant intermediaries in the marketplace. So if you take a country that is totally unbanked, if you take some African country, Burundi, for example, where 90% of the people are unbanked, then they scramble and they try to effect transactions on whatever devices that they have. And strangely enough, it's exactly in these countries that and a mobile phone network operates like a banking system. In other words, I can send money from my mobile phone to another person, just using the mobile network. And then when you stop to think about it, actually payments is just that. It's actually a transfer of information from one phone to another. And so you have platforms such as the ones in Kenya, M-Pesa, that becomes popular in some countries in Africa. Now, what's interesting is that it's not popular everywhere. Then when you go to countries that have a nascent banking system, they're ambivalent about whether a phone-based system like M-Pesa can be successful in those countries. And then when you have a very well-developed banking system like South Africa, which is similar to that in the US, the M-Pesa model just doesn't work because people trust their banking system, but then there they are, at the mercy of the traditional banks, the KYC, the know your customer rules that they have to succumb to, and all of that incurs a cost. And ironically, it's the developed banking systems where the cost and the cost is very high and the pace is very slow. So the financialization of everything essentially is about the digitization of everything. The more we digitize all of the different information required to carry out a transaction, information about you as the person, information about your counterparty, the people that you're transacting with, information about the flow itself, then we see that we actually end up creating a financial system that is universal, that can be used by everybody. And it's interesting that the US is very slow, but that's because the incumbent platform has a lot of hanger-ons. If you take an average payment process, a check clearing payment process, it's got effectively about 15 to 20 counterparties on either side of the transaction who benefit from the transaction. So it's your bank, it's the processing company, it's the interchange that the state requires you to go through, and then it's the same thing repeated on the other side of the transaction. So and all of these players are not going to allow the transactions to disintermediate them. So they put a lot more regulation in order to slow down the process. But I think that the Fed is determined to digitize more of the transactions. So we saw a few years ago that checks are now able to be captured on a digital format. But then eventually you don't even need checks, that you can actually make the transaction entirely digitally and it works just fine.
For sure, for sure. And checks are kind of going out of style. But we still have a lot of old timers that like to use those. I'm just like, why? You just send me through the Cash App or something for some services and things like that. So yeah, I do think that the US is very behind and they need to catch up. But that also, I think they have to go through like certain protocols because they can't really just like force something onto the people that they really don't know or understand yet. And I find it interesting that China is getting involved in it too, because I believe that they had a crypto ban or before, and now they're just starting to integrate it into the process. Like, why are they uplifting it? Or is it this ban still there, or they're just doing a little bit of more intensive research and they say, hey, this is actually a really good idea, and we could see what we could do with it. So what do you think?
Yeah. So the crypto ban in China was simply driven by one factor only, because China wanted to introduce its own version of a central bank digital currency, CBDC.
Mhm.
And they did not want any distraction or any alternative to the state-sponsored model. And they've tested it umpteen times. They're testing it right now in the hundreds of millions of users and transactions and value of money that is being transacted. But strangely enough, they've not declared it as going live. And then as they kept the ban going on crypto, they realized two things: that around the world, the largest number of crypto enthusiasts and blockchain entrepreneurs are Chinese themselves, and all of these Chinese players have now created a diaspora. They've just gone around the world to Canada, to US, to some of the states in the US where you can mine crypto cheaply because they've got cheaper access to electricity and all that. And even in South America, it's the Chinese diaspora that dominates the crypto space today. And it's interesting that it's the state that made it that way, and that forced them to go out of China. But today, China has got two interesting conundrums. The first is the value of crypto has been on the increase, and it has had a sustainable valuation. So in other words, crypto is real; it's here to stay, and it's got a valuation that society depends on. It's not going to disappear overnight. It is digital gold, and so the Chinese state has taken steps to make sure that it's not far away from them. So Hong Kong now takes a alternative, regulatory approach to crypto than mainland China, so that mainland China can keep a watching brief on what's going on. At the same time, there is suspicion, or there is rumors that the Chinese state itself is an accumulator of Bitcoin, and as are several other states. They're accumulating Bitcoin, they're accumulating gold, and they are reducing the accumulation of U.S. Treasury bonds as an asset class. So there are things that are happening at the back end that is not obvious, but the Chinese state is not, it's not shut itself out of its overall approach towards crypto or towards blockchain. At the same time, what's been happening is that the Bank for International Settlements has been recommending a universal approach to digitizing bank assets by promoting the idea that central banks around the world should not issue retail CBDCs. And when you hear the word CBDCs, always think about it as a bank-issued stablecoin, okay? Where the BIS is telling regulators around the world, don't issue retail CBDCs, issue wholesale CBDCs where you can manage the central bank's role as a lender of last resort. In other words, it's between the central bank and the commercial banks, and the central bank and other central banks. So for cross-border flows, let's test this idea of a wholesale CBDC. But on the retail side, encourage all banks around the world to tokenize their deposits. And to me, a tokenized bank deposit is a stablecoin by another name. It's just a stablecoin that is issued by a bank instead of a non-bank. Now, if all of these works according to plan, the unintended consequence of the banking system, wrapping its mind around digital currencies and CBDC and all of that, is that number one, China will have to take a back step from where they've gone, because they already have retail CBDC circulating in their marketplace. And to be honest, the idea that they call pilot has been a pilot since 2021, and it's now 2024. If the pilot is working well, why isn't China, releasing its retail CBDC as a given foregone conclusion in its own marketplace? And I think the reason they've been holding back is because they want to see how other countries take on the BIS preferred model, where the central bank doesn't issue a CBDC into the whole country, but issues only its own version of wholesale CBDCs and encourage the banks to tokenize their deposits. Now, if that happens, what the unintended consequence that I see are as follows. Number one, if banks compete on tokenized deposits, they will then compete on functionalities around their deposits, just like a stable coin has to compete on what can you do with a stable coin. Can you swap? Can you exchange? Can you lend? Can you trade? Can you add a functionality where you have purpose of use, things like that. And on that front, funnily enough, the bank-issued tokens will resemble more the cryptocurrencies that we are familiar with today. And if that happens, what I see taking place is that to the man on the street, they will see no difference between a cryptocurrency, a bank-issued tokenized deposit, a stable coin, and all of these assets will intermingle and then bring about the reality of a financialized economy as an unintended consequence eventually. So that's how I think it's going to play out. And all of the different countries, including China, are lining up to see what needs to be done. In the U.S., interestingly, both the Treasury and the Federal Reserve Bank have issued statements saying that they also subscribe to the idea that the Federal Reserve Bank should issue wholesale CBDCs and then allow the banking system to tokenize their deposits. So the U.S. On official comments, put out by both the Treasury and the Federal Reserve Bank, is well on its way to encouraging tokenized deposits. So that's the state of play in terms of the financialization of everything.
Nice. Well said. Now, could that cause a little bit of friction between the two countries? Like, could that help the future of like war on the financial battlefield? You know what I'm saying? I know that's a little bit steep, and I know you go there, but if you could dive into that, that'd be great. Because China, the big boogeyman myth is, why will China not take over the U.S.? And like now that things, since last time we talked, there's more things that are happening in the world today, and it's kind of looking scary. So can you give your thoughts about that?
Sunny, this thing about China taking over the U.S. and they call it the Thucydides trap. All of these talks just distract us from what's actually happening. What's actually happening, as I say in my book, is that finance is becoming highly financialized or personalized in every economy, whether you are the US or China. You and I are gaining greater control over our financial assets and greater control over how we transact our financial assets, and we can increasingly do that peer-to-peer. Now, the personalization of finance is also the personalization of society. So both the US and China have to be concerned about what happens when their own citizens have options in terms of how they want to transact. Okay, so this is not like a we against them. It's like we against a huge phenomenon that's changing all of us. Now, in the meantime, what's happening is that because many countries around the world are now not happy with the US, and it's interesting, it's always the operating principle is the unintended consequence. When the war in Ukraine built up, the US wanted desperately to to freeze Russian assets in the U.S. and freeze all Russian money flows. And because of that, the U.S. actually froze a lot of Russian assets in the U.S. and in a lot of the Western economies, and then is now proposing that those assets be redirected to the Ukraine cause. Now, strangely enough, even the countries that are U.S. allies, Switzerland, and Germany, and of course those that are not necessarily allies, but Saudi Arabia, which many years ago agreed to transact all oil flows in the dollar, are now looking for alternative forms so that they don't become trapped by the U.S. Control over money flows around the world. And for many of these countries, they're making transactions to flow on what is called a bilateral basis, party to party. Excuse me. Yeah. So they are making transactions to flow on a bilateral basis. Now, in the hope that they can bypass US dollar denominated global payment ecosystem. So they are not entirely successful. And the US is now worried that the US will lose its position, its amazing position that it evolved over time, where the dollar is the preferred currency of exchange around the world. And the US is doing all that it can to ensure that some of these bilateral arrangements don't work. So China, for example, has been increasing the use of the renminbi as a form of transaction with countries where it has a very strong bilateral trade flow. So if Saudi Arabia buys things from China for $100 billion and China buys $150 billion worth of oil from Saudi Arabia, so there's $100 billion worth of transactions that they can just trade off each other, and the money doesn't really flow, but they provide swap loans to each other and then complete the transaction. Now that's a temporary, uniquely case-by-case type of approach. But if the US continues to be belligerent and misuses this privilege it has of the dollar as a global trading currency, these countries will increasingly use the alternatives that they've been working on. And then what I see happening is that out of sheer desperation, the best way to improve the dollar's effectiveness and the dollar's attractiveness as a global payment currency is to digitize it. So it's actually in the US interest to one day say, you know what, we're not issuing physical dollar notes anymore, but we're allowing our own institutions to issue digital formats of our currency. And it'll be a global currency. There are no exchange controls or capital controls. That will give the U.S. a fillip that will take it into the next 10 years or 20 years, where the dollar becomes effectively the cryptocurrency of the world. So I think that geopolitics is shaping money flows and the future of the dollar as a global currency. But as I also say in my book, countries have a way of making these decisions in moments of desperation. It's never as a part of a conscious flow or a conscious policy that they want to achieve. There's a lot happening, around the world, and it's not like the whole world is stacked up against the U.S. It's different countries are actually stacked up against each other as much as they are stacked up against the U.S. And whichever country comes up with a system that is universal, that's the country that will have a dominance over others. And it's not just countries; it can be corporations, it can be it can be a coalition of countries. I come from the part of the world where 9 countries to come together and call themselves Association of Southeast Asian Nations, so that makes the combined economy much larger than any one country. In Brazil, Argentina, and Uruguay, I think they've also formed a union of sorts where they're thinking about issuing their own regional currency. So there are a number of initiatives like this around the world. None of them amount to anything in particular, but where the dollar is threatened, the US will act decisively, but always in moments of distress. And it takes the path of least resistance. And the path of least resistance for the dollar is to digitize it.
You think the next financial crisis, everything will be digitized, or?
Increasingly so. When we look at the previous 3 or 4 financial crises, you realize that assets have been digitized step by step. So the first financial crisis that bankers can subscribe to or understand was the one that resulted in Basel I. This is in the 1980s, where there was a a mom and pop savings and loan crisis in the US, where the assets were hard mortgage assets, mom and pop mortgage loans to the community banks. And what the community banks held were actually hard mortgages in their balance sheet. Then the crisis that came after that, 1987, was more of a markets crisis. It was securities. Then when it went on to 1996, 97, that was the Asian financial crisis. It was more about the perception of the ability of emerging markets to pay their debt. And then when we go up to 2008, it was no longer like the first crisis, which was on hardcore mortgages, but it was derivatives of mortgages. By the time we reached the 2008 crisis. So it is that increasingly the balance sheet of an average bank is becoming what I call ephemeral. In other words, it's not carrying hard assets, it's carrying trading assets, and it's carrying ephemeral assets, which are banks today buy and sell more of the loans of each other than they do of their customers. And that's where some of the problem is. And some banks is as high as 98% of their balance sheet is trading assets, not good old-fashioned loans that they give to their customers. And that in turn creates a futures market, which is then totally ephemeral, meaning that there are no underlying assets at the back of that. Now, if you digitize those assets, not only do you not have access to the underlying asset itself is digitized. The rules by which a financial crisis evolves changes dramatically. It's already changed a lot from the good old-fashioned savings and loan crisis that we used to have, where all it required was to make sure that the banks held enough deposits to be able to lend to their customers. But by the time you reach the 2008 crisis, it was more about the city banks and the New York wholesale banks' ability to trade with each other. And so it is that when we extrapolate it into the future, we're looking at a crisis where it's vaporware. It's banks carrying assets that they have absolutely no control over. And there, the operating principle is no longer balance sheets or how much capital you have against the assets that you carry, but almost entirely based on perception of your counterparty, perception of the markets on the assets that you carry. So this is the trajectory that we've been building, and that's what I say in my book. So it's not difficult to extrapolate and imagine what the next financial crisis will look like.
Yeah, make sure you get his book. The links in the description are going to be down below. I believe it's there you could buy it on Amazon. Am I right? Or
That's right. The great transition, the personalization of finance is here. You can get it on Amazon. You can look up my own blog page, emmanueldaniel.com, and then get to the book from there.
that's good. That's good. So yeah, man, how you feeling? I could keep going on. Do you feel like we didn't cover some things or um
Yeah, sure. You tell me. I mean, you tell me what you've been thinking about, and I'll tell you where I'm coming from. Like, uh, it's like I'm curious as to what has been on your mind, and and then to work the messages in there. The SEC has been on a back foot for the regulation it's been trying to put in place. I mean, I think the Congress is pushing the SEC back to not be as belligerent against cryptocurrencies and the crypto exchanges. So we'll see, how that evolves. If there is a change in government, then there will be a change in the leadership of the SEC. And there are enough crypto-friendly people who, or people who actually understand where they want to take this convergence between traditional banking and crypto into the future. The thing is this, that when you take what's happening in AI at the moment, the US is where a lot of the leading thinking on AI is evolving, and there's breakthrough in the way in which large language models are developed and deployed. So what Facebook and Google wants to do is to empower every individual with their own respective LLMs. So that's going to have a different impact on things like algorithms, both on the crypto side as well as on platforms. All platforms exist and succeed on the quality of their algorithms. But now that the individual is going to have access to his own algorithm, the whole ecosystem is going to be changing. And so I think that we're seeing a convergence not just of traditional platforms with crypto, but with traditional banking with crypto, and traditional banking with platforms. So and that's why I put my own finger on this concept that I call the personalization of finance. If the individual is going to be empowered to this extent, then what do the institutions do?
that's right. That's right. And AI is like you said, is becoming very big. Literally my girlfriend, she uses AI for everything. I'm just like, but you could just Google it. She's like, in what you're saying, Google is integrating it into their systems also. So, and plus, a lot of social media influencers are using AI to help them edit their videos. And it's kind of making their algorithm go better than what it was when they were doing themselves or if they hired somebody. But yeah, it's also like there's a good and there's a bad that comes with it, like the yin and yang. In China, do they talk about the yin and yang a lot, or like a little bit of good and bad and a little bit of bad and good? You know what I'm talking about?
The, the yin and yang, you mean? Yeah, well, that's a very, very basic Chinese philosophy, that you need that balance between yin and yang to have a balance in the world, right? So China is like the Chinese tradition is that you need to find that balance. If you can't find that balance, that's when society and even your health, your body, gets into disrepair. So the thing right now is the world is going into an overdrive in terms of the amount of information that is out there, but also the quality of the information that's out there. So we desperately need a new governance model in order to manage this entire crazy flow that all of us are going towards. And I think that when I see the US suffering in terms of trying to figure out who its leadership should be, and how it is that leaders who are belligerent and openly abusive and so on can still get a lot of attention. It's not that the leaders themselves are one way or another. It's all of society is looking for an answer, and when will we reach a next plateau where human society can operate in a stable format? We're not there right now. And to say that one system is superior to another, to say that that China is a lot more organized than in the US, it's just the same as during COVID. China looked very organized. It could shut down an entire city of 30 million people and keep the virus from spreading. But it could only do so much, because when they shut down the second city and the third city, things didn't work just as well. And then they find out that the best way to deal with COVID was to create mass immunization, or mutual access to the virus. So the thing is that the same thing applies in information. The idea is not to manage that information or to control the information, but as it spreads out, as all of these newly created information spreads out around the world, we need new governance models that checks each other out and cancels each other out to build that yin and yang that you're talking about. And I think the world will go through another 100 years of turmoil to reach that inflection point, or that plateau where we find some form of stability. And we've been through this before already. That's exactly what happened during the Industrial Revolution. It empowered a few countries more than others. And it created two forms of giants. It created the British Empire on one extreme, which was liberal but conservative in some ways, and it created the German Empire, which was highly militarized. So the thing is how different countries respond to the same issues that all of us face. And right now, the AI is creating that revolution in the information era, where we can't tell what's right, wrong, what's fake, what's true, and what's meaningful and what's not meaningful, what's usable and what's not usable. So all of society will go through that transformation, and until we reach new forms of association. The current US model of Republicans and Democrats, that's too limiting. There are too many variations within both platforms that need to be carried. So, the nice thing about blockchain as a technology is that it promotes the idea that the individual becomes the platform, and I, as an individual, decide who I want to interrelate with. And I create communities around myself. I don't have to get on a big tech platform in order to exist and in order to interact with the rest of society. So that's what blockchain is promising to create. It now needs to be financialized, and then it needs to be personalized, and maybe we'll find some form of stability in society through that kind of empowerment of the individual. Now, when that happens, you will see that the state becomes afraid because it's losing control over the individual, and that's where states that used to have very clear control over their communities will start to reject the idea of the empowerment of the individual, and you'll see some issues there, and some states will not handle it very well.
Yeah, man, it gets bad down here, especially between the two parties, like with Biden and Trump supporters. I'm just like, it's almost entertaining, to be honest. I'm just like, you guys are really like, and I feel like there's propaganda being put out there where they want us to fight against each other to distract us, like, from the bigger issue or whatever that's going on. But it's just like, it's like, you can't, like, people lose friendships too. It's just like, well, I'm this or I'm that, and I can't talk to you if you don't agree with it. I'm just like, can we just all get along, be civilized here? Like, we're well past this. This this goes back like hundreds of years. Like we should be more mature about things and think about things on and 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 be have criticism, but be friendly about it too. Like everybody should deserves opinion, but like not to shun somebody away just because they have different views. And when you when you say like financialization of everything, to me, this is going on in the back of my head. To me, I feel like the message is like the globalization of of one digital currency, like world peace is what they're saying. And I talked to the ambassador of the UN about this before that's involved with it. And he's like, and basically he's just like, yeah, it can bring world peace and bring a lot of good. So is that what you're talking about? Is like a one world government, even though we were talking a little bit about like the government going away from the government controlling its people, like wouldn't one world government be like them controlling the people instead of them running away? If that makes sense. I don't know. Maybe I should put it differently, but just let me know your thoughts.
You know, you just brought up something so interesting because the same Sam Altman who created ChatGPT is also the creator of something called One World Coin, right? And he's such an interesting person because and he needs to be followed closely to be understood. He started life as a blockchain guy, and he comes from the cryptocurrency world, and then he creates a AI platform where he's trying to promote the idea of Web3. The funny thing is that the AI platform that he created is more a Web 3.0 rather than a Web 3. And what's the difference? Web 3.0 is what what technology like sorry, can I go back there a bit? I just um,
Yeah, yeah.
no, sorry, uh, Lee, the creator of Web3, Sam Altman and Tim Berners-Lee. Okay, got it. Okay, just there is a big difference between Web3 and Web 3.0. Web 3.0 is what was created by Tim Berners-Lee when he connected files together and created a platform on which all of the new technologies like all the social media platforms like Google and Yahoo and Facebook and everybody sits there. Web 3 is diametrically different from Web 3.0 in that that's the technology that personalizes platforms where each of us will be a platform of our own. And what Sam Altman has ended up doing is empowered Web 3.0, the Tim Berners-Lee platform, by putting AI to sit on that platform. So Microsoft and now Google, compete on extending the lease of life of the Web 3.0 universe, which means that the big businesses that sit on them on this platform continue to benefit and continue to be the preferred means by which we access AI. And then on the other hand, he's also the founder of WorldCoin, where he wants all of us to put our data on a blockchain-based platform, and empower the individual and all of that. So what you just said about where this is going is very interesting because it's not a given yet that either big business or the individual will benefit from it.
Yeah, thanks. Thank you for that. Well, man, we've been going at it for a while. I appreciate you coming out on the show, dude. It's been an honor and pleasure. And yeah, I would like to do this again. I would like to do this again, to be honest, because I feel like we still have so much more to talk about in the fit in a tiny show. So we'll be in touch, dude. I hope so. And let me know the next time you come down here, and we'll get together and have a cup of coffee. What do you guys do in India? Are you from India or Asia?
I'm from Singapore, but I'm in the US a lot. So
Okay.
no, I'm not. I'm ethnically Indian, but I was born in Malaysia and live in Singapore. I'm from Southeast Asia, so I'm not Indian national in that way, and I make that distinction very clearly. So I think that it's like meeting a Chinese Australian and thinking he's Chinese. No, he's Australian. So that kind of thing. So.
No
So in that way, I
disrespect.
mean,
No disrespect at all.
no, fine. It's we all wired differently that way. But yeah. Next time I'm in Sarasota, we should catch up and we should jazz a bit together, and then we'll find
We
ideas to sort of coagulate into a podcast.
Yeah, we might even be able to sit down and do one in person too. So that'll be good.
Let's look forward to that. Yeah.
And yeah, dude, I wish you the best with your endeavors, and
Likewise.
have a great day or night wherever. Yeah,
Yeah.
wherever
Thanks,
time it
Sunny.
is.
You take care.
You too.